Hey guys, Carlos Cortez here with another episode of Scriptures and Wall Street. Hey, wanted just to talk about interest rates, and a lot of people are on pins and needles and just kind of holding their breath to see what um, Jerome Powell is going to be talking about over there at the Tetons Mountains in Jackson Hole. Beautiful, beautiful place. I've been there. I don't know if you ever been there, but I got a little emotional last podcast because a lot of people are traveling coming into summer, and I really feel that we're so underrated as far as America tourism. And maybe I'm biased, maybe I just love our country, but we really have a beautiful country. Um, Teton Mountains is just so beautiful. Wyoming is beautiful, and I think not enough people know about it. To be honest, as an East Coast cat, um, it's just so beautiful, man. Like majestic from the mountains in Arizona to California. It's just beautiful. Travel America, guys. Florida, the sunsets in the on the water. It's just breathtaking. That's why I'm still here. Um, anyways, I'm actually jealous that they're over there because I can't imagine how beautiful it is right now. Maybe because the humidity is there. There's no humidity, and I'm in humidity here in Florida. For my Florida peoples, you know what I'm talking about. Um, but we're all on pins and needles with this interest rate. Like it has such a huge effect. And today I just wanted to talk about like biblical scriptures or scriptures on how we can perceive interest rates and what the Bible talks about it and kind of my discernment. I may be right or wrong. That's up to you. But before I get into that, everything on this podcast is meant for education and information purposes only. This is not a recommendation. If you would like financial advice, give us a call at 813-448-3446 or visit us at cortezwm.com. I'm more than happy to look at your retirement, to look at your statements and give you honest truth. Like straight up, I'll tell you good, bad, stay there, run to the woods. Don't ever do that. Whatever you want, I would be 100% authentic with you because you know why? I'm not desperate for business. I value business. I have a heart to literally help people in their retirement. Like that is my gift. That is my calling. So I want to extend that to you no matter where you're at in the country. We're pretty much licensed everywhere. And just give us a call, see for a great fit. And now I'm not good fit for everybody, but we are excited to have a conversation with you. And we are 100% virtual. So, I mean, this is what people do now: talk on a phone, Zoom, FaceTime, whatever platform you want to communicate. We're okay with. Anyways, I just wanted to welcome our new listeners. We've been on several different networks now. We're on Lindell TV, Stu Peters, and now Patriot TV, and others that are picking us up. So we want to make sure that we welcome them. And this show is growing a lot of popularity because not a lot of advisors actually make a living giving advice. So that's me. I've been doing this for almost 20 years now. So I got the gray hairs to prove it. So as a former stockbroker, I got them early. And that's why we talk about red money. We talk about red money a lot because that's where most people are at. And for those of you that don't know red money is unlimited losses, unlimited gains. It is pretty much anything from crypto to stocks to bonds to gold, silver, even your home. Anything that has a ticker and that does not offer principal protection, typically it's a security or a commodity of some sort. And so that's red money. Not all red money is bad. You just need to know what it is. And so when you go into retirement, your goal, and it does make sense, to reduce the red money in your life and transfer it to green money. Now, green money is going to be contractual agreements. Green money is where I can legally say the word guarantee because it's not a security. It's actually insurance-based principal protected product that your money is guaranteed. You literally have a principal protected bucket that the government cannot stick their hands in and take it. It's anti-CBDC. and it tracks an index like the S&P 500 or the NASDAQ Premier Index or the QQQ Growth Index. It literally tracks an index, typically with no fees and high participation rates. So if an index is up 10% and you have an 80% participation rate, guess what? You just made 8%, and those gains get locked in, principally protected, not some FDIC garbage, but literally an insurance contractual agreement with an A-rated insurance company with billions of dollars, mind you, that will protect you. So what's crazy about this is I always talk about O.J. Simpson. He had a green money advisor. You guys knew he killed his wife, got away with it. The jury's still out on that one, right? Or did Epstein really kill himself? Up to you to decide. But what I'm getting at is even him, who went back to jail because of his decisions, could not outlive his money. So think about it. He got sued, lost in civil court. They could not even touch that money. Literally lived off the interest during his time, and then goes to jail 15, 20 years later and literally dies, and he was still clocking dollars. I hear it's like $50,000 a month. Like, just nuts. We can set this up for you because the way this AI thing and track and traces is going, like, you guys get it. This is why people buy gold. This is why people buy, they're still in red money. They buy tangible assets because it's harder to track, trace, and control, which is true. I don't want to go over that. But at some point, you're going to have to trade those gold bars, those silver bars, all the bullions into a fiat currency, possibly. And so the money that you have in Coinbase, the money that you have in a bank, the money that you have in any crypto exchange, including your gold and silver, is not guaranteed. As a matter of fact, the money that you have in a bank is not even yours. The money that you have in your Coinbase exchange is not even yours. Do you know the state of the state of California is now considering that if you put your money in an crypto exchange, such as Coinbase or crypto.com exchange, or Binance, or literally do not log in for 3 years, it is now considered abandoned property and subject to the abandoned property rules of your state. Yeah, so if you lost your keys to your wallet, you don't know your passcode, can't get in, your money's gone in 3 years, man. I mean, that is disgusting. So now you really need to go and get a cold wallet and get it off the exchange. This is why I've been telling you guys, like, you don't own the money in the exchange. The exchange is there to provide liquidity. You provide liquidity. And guess what? Because you provide liquidity, they offer staking, and you can stake your Bitcoin and make 4% annual a year. Doesn't this remind you of the banking business where you put your money in and they give you a certificate of disappointment? I'm sorry, certificate of deposit. And they give you 3% for 2 years. Meanwhile, they have 2 years. All they got to do is pay you 3%. They loan it to Pablo's landscaping company and make 9% and charge him 9% on your money. Yes, on your money. And you're happy because your principal is protected. It is through the strength of that bank. But do banks go belly up? Yes, they do. How many insurance companies have been belly up? I guarantee you it's not as much as banks. Let me give you a hint. Life insurance and annuity carriers, they don't go belly up like banks do. They have been, but it's very rare. And I know you say, oh, well, AIG didn't. No, they didn't. AIG had an options derivatives trading department with like 40 people. And that department went sideways with the auction rate securities in 2008. And AIG, although I used to be a big fan of them, I'm not doing a commercial for them here. I'm just letting you know during that toxic asset relief program, also known as a TARP, they were the only insurance carrier to pay that debt back. So kudos to them. And they survived the Houston floods. They survived 2008. They paid the TARP back. And more importantly, what people do not know is that they have these living benefits, which is pretty amazing. They have living benefits and they paid billions of dollars. I'm sorry, millions of dollars in living benefits all through that turmoil of the Great Recession known as 2008. The lost decade is from 1998 to 2008. This is where we made money in the booms, the dot coms. We lost money in dot coms, and we made a killing in 2004, 2005, all the way up till 2007. And then boom, 2008 hit. 2009 was worse because now you're going into your principal. So we lost a decade of returns. It's also considered the lost decade. So we don't need to go through that. We see the S&P 500 is up substantially this year, as well as the NASDAQ. And now we have an environment where it's interest rate driven. Now, some of you, the investor sentiment, it's a little different right now. We know they're going to lower interest rates. We definitely know they're going to lower interest rates. But a lot of investors are wondering, like, what is going to happen right now? Because timing is everything. And it goes to Ecclesiastes 3:1. I'm reading on my screen here. To everything, there is a season and a time, every purpose under heaven. Just like the seasons of life, the financial world moves into cycles, as we know. Times of rising interest rates, times when rates begin to fall. And today, obviously, with the Fed signaling they are lowering interest rates, which means for your money and how God prepares his shifting economic seasons. What's interesting is that the Fed actually has been elevated. Like the rates have been really high for almost 2 years now. And we're all like getting fatigued about this high interest rate environment, like mortgages. I mean, my credit score is pretty decent and I got like a 7.1. And then I bought another property, it was at 7.5. Like that is just nuts. But I did it because I wanted this property so bad. I'm getting refied, right? So as soon as those interest rates go down, it could be as soon as September 22nd. Actually, we'll find out. We'll find out this Friday, the 22nd, if Jerome Powell, if he speaks in Jackson Hole, what they plan to do in September. Probably going to, my guess is that they're going to do a quarter basis points reduction. And they're going to cut the interest rates by 0.25. I totally see that happening. I could be wrong. Maybe there's some people that, like Bassett said, that he thinks it's going to be 50 basis. It needs to be 50 basis points. So that would be more aggressive approach. Now, the problem with that is that big tech will get a bump. The equities will get a bump. It could bring more volatility into the bond market, which would be kind of interesting. Obviously, when rates go down, yields go down too, but those bond prices will go up. So for those of you sitting in treasuries, you will see some major growth. And speaking of treasuries, we'll talk about TMF here in a second, like how to make money on these interest rates, how to make money if the market goes up, down, or sideways. And that's what I want to bring to you guys today.
You have the Clarity bill, you have the Genius bill, you have the stablecoin bill. All these bills are there to change the financial landscape of what is about to come. What are you doing right now to protect your money, your retirement from all these CBDC-like systems that is already track, tracing, and controlling you? Even more so with the AI revolution that we're in right now. We've been talking about this for so long now, and we are effectively helping clients protect their money, secure their retirement, get out of red money, support your values, support America, and not this PBDC system. They mask it as ESG, they mask it as DEI, they mask it as all these things, but at the end of the day, it's all about track, trace, and control. Been a financial advisor for 20 years now. We know what we're doing, and we want to help God-fearing patriots secure their retirement. God bless. Click the link below if you would like to have a conversation.
James 5:7 tells us, be patient, therefore, brethren, unto the coming of the Lord. Behold, the husbandman waiteth for the precious fruit of the earth, and hath long patience for it. And what's interesting is that the rate cuts remind me what it says in James. Like, we should just be patient, and the person that waits will get benefited from it, right? So the high interest rate seasons, we're storing up cash, securing safe yields, and we're able to seize opportunities once those interest rates lower. We can refinance, we can reinvest, we can reallocate, we can borrow money for growth, and we're planting seeds for future. So when the interest rates do drop, you'll see businesses realign their financials, refinance pretty much their mortgages and their cars. We'll have more cash flow. So this is going to stimulate the economy. So the tariffs actually brought in $29 billion last month. We had last month, we also had the PPI index, which is a wholesale prices, go up. So we're going to see some turmoil here, guys, because the wholesale prices, which get passed on to the consumer, the businesses can't get it at their wholesale price like they used to. Maybe it's the tariffs related, maybe it's inflation, combination of both, but that's going to get passed on to the consumer. And we knew that as soon as the tariffs started rising, that inflation would go up a little bit, but then it'll eventually cool off. And I said that on Joel Oatman show. I said that throughout the board, and here we are. Here we are. Like, I wasn't talking out of my, what? I mean, this is exactly what I was discerning, and it's coming into fruition. So we have a situation here, guys, where we have an opportunity. Like it says in James, we just got to be patient, and then we can strike for opportunities. Good things come to those who wait. And so if you've been listening to Scriptures in Wall Street, and all you got to do is go to Rumble. I've been telling you guys, is go to Rumble, type in Scriptures in Wall Street or my name, Carlos Cortez, and click like and subscribe. Because I don't know where my podcast is going to end up at, but I do know I will have my own channel. So if you're going to follow me, go to Rumble and please click the like and subscribe button. And that way you always get my content. I always go live when I'm hanging out with the family, or I'm at the ice hockey practice, or I'm just grocery shopping, or watching my wife road rage, whatever it is. So feel free to follow us there. And it's pretty interesting, guys, because the mortgages are going to come down. So if you have homes that are being sold right now, you could, in theory, like, depending on what they say this Friday, you'll know, maybe I should be asking more for my home because now there's more buyers in the market. And so there's going to be, right now it's a buyer's market. It might shift into a seller's market. Guys, I'm telling you, right now the mortgage rate's around 6.5%. If it gets to 6%, I think that's the magic number. You're going to start to see people flocking. If it gets less than 6, like Bassett said that he thinks it's going to go down 150 basis points, 1.5 over now in between next year. He could be right. If they do a 25 basis point reduction next month, September, and then October, and then November, and then December, and then one in January, and one of those are 50 basis points, I mean, he's right on the money, because I think they're going to lower it every single month, or maybe they hit it hard this month and skip next month and then hit it with another modest rate cut bump. Or they might just say, we're just going to start with 25 basis points, see how the economy acts to that, and then hit it again and again and slowly build into it to try to create a soft landing. But let me tell you something, guys. The Fed is always going to be late to the game, late to the party. So we'll see how it works. We'll see how it works. But more so, you have to realign your investments. If you have money in the bank, if you have money in any type of tactical fund and you're in treasuries or you're in equities, what are you doing right now to stress test your portfolio? What are you doing now to get out of red money into green money? Money that is protected, money that has a guarantee on your principal, money that has principal contractual protection and that can grow 6 to 12% annually, no problem. This is what we do here. So we want to make sure that your retirement is secure. Now, 401k IRAs, you don't want to lose money in those because here's the thing, you can't write it off. And for those of you that have gold and silver and have millions of dollars, now's the time to break out of it or at least sell half of it and put it into a bucket where you can create a pension or a bucket that you can guarantee and literally have a guaranteed safe money bucket so that you can retire and just live off the interest. That's not too hard to comprehend. So just know that I am here for you. All you got to do is give us a call, 813-448-3446. And let me show you some charts real quick. So here we are, guys. This is going to be the regular S&P 500. I want to go ahead and say the obvious. The obvious is we have red traffic lights brewing up, one green traffic light on the very, very bottom, if you can see that. This is my long-term indicators, short-term indicators, midterm indicators. So my short-term is still bullish. However, look at our MACD. If it's under this white line, that means there's negative pressure. Also, I'm getting a dot all the way down. You see how this is fanning down? So momentum is being lost as we speak. Volatility index, we'll look at that in a second, but it's creeping back up. We are starting to see a massive, massive turn. Now, with the interest rates popping out, or Jerome Powell speaking Friday, we could see this thing have a really bad impact, or it can say, we're going to lower interest rates and big tech just goes through the roof. So we could see a massive bump, or we could see a negative sentiment. Typically speaking, if they're going to lower interest rates, we will see a market, we'll see a market bump followed by a correction. But speculation at this point. But right now, the structure is down. Like we are seeing the markets go down. If you look at this golden cross here, I don't have a red cross like I did here, a death cross signal. And the 200-day moving average typically is like this green line here in between everything. Let me remove my drawings. It's confusing. But we had a golden cross here. I'm sorry, death cross. And now we have a golden cross formulated. And the market went up. So the software indicators were perfectly accurate. However, now we're starting to see downward trend. So I suspect to see a death cross possibly forming right around this area, around 63.79. We'll get an indication if this even pops even more momentum by Friday. We'll get an indication that a signal, kind of like a yellow signal light, but it will be pink on my software, around 63.92, which we're not far from. Like, so if this thing goes down another 3 or 4%, we're going to get a signal saying, hey, there's a death cross that's approaching. And then boom, we're right there. That death cross is going to be, the official death cross will be around 63.79. But we could get a traffic light saying, hey, warning, a lot of sell pressure here. Also, volatility index, don't forget, we'll look at the volatility index. And this is the S&P 500. Volatility index tells us the truth. Volatility index, here we are. Look at this bad boy. I got a sell signal back in August 20th. No, that's today. So I am getting a weird sell signal here. Okay, I'm sorry. That was on the daily. Okay. All right. Yeah, we want to look at a daily here. So sell signal was back in August 7th. And you start to see this little pop here. The green traffic light just turned momentum. You see the green speckle here. MACD is starting to get closer to the zero. And once it crosses over that line, you can see a massive momentum crossover. That means the stock market's going down. This goes up. That means stock market is going down. So we're starting to see some structure going on the upside. How far, how high? Well, it all depends on how they react to Jerome Powell. We're all kind of sitting on the sidelines waiting for what they're going to do because it's going to change the market up. Many of you have been making money in the stock market and don't want to even transfer funds. I totally get it. But I guarantee you, come this weekend, you're going to see fireworks and you might just pick up the call because you know why? You get complacent and it really doesn't matter until you start losing money. So if you haven't made a decision on what you want to do, if you haven't contacted us to provide a safe money bucket for you or a yellow money bucket for you where we can trade the markets with lowering your risk and increasing your return. And a lot of times we're able to save fees, annual asset management fees. So our traders are really good at what they do. They I never touch your money. I only give you advice on what to do with your money. And more importantly, you want to have somebody behind the driver's seat, in this case, behind the screens, to look at every single second of the day and not just one person, but a whole team looking at the portfolio to make sure they know the ebbs and flows. They have indicators just like I do, and they're making trades. They're making trades based on current marketplaces, taking the risks, taking the opportunities, seeing the weaknesses, seeing the strengths, seeing the channels, the energies, the frequencies, and having the mindset to trade your account. We have access to all that. So the volatility doesn't affect us. It doesn't hurt us. We just plan for it. Just like we're going to plan for when the interest rates do drop. And for those of you that have been doing the James 5, getting ready for that season, you know that our bags are packed up already. Our bags are packed up in TMF. Now, I've said it since day one. This is not a recommendation. This is for information, education purposes only. If you invest in this, you've lost money and you could lose money if they do not lower interest rates. They don't lower interest rates. This puppy, it will go down probably to like 29. Like people are just really fed up. I was happy here. I was happy at like 50. I was talking about around 50. I said when they lower interest rates, it was way back, daggone October of last year. I started talking about it because they're supposed to lower interest rates around this time and they haven't. And they're always 6 months to a year later. And that's why I bought a January 2026 call at 100. Because once they lower the interest rates, this puppy will scream high, like really, really high. Also, it's inflationary based too. The 10-year, the 20-year Treasury, it doesn't move more impact on lowering interest rates and mortgage rates. It moves basically on troubles on inflation, and then they lower interest rates. So if inflation is getting higher, and they have to lower interest rates, this is going to pop very, very well. It will respond. It will respond to mortgage rates, not as much as a 10-year, but a 20-year is going to really, really kick off if inflation is going through the roof. So this is why it's been going down is because inflation is supposed to be going down. But also, we know that inflation is not as good as they say it is. And when they lower interest rates, this should pop up. So I'm pretty excited. If you have TMF, don't get investor fatigue. Just stay in it. Stay in it. It could pop up. Look, our 2 out of 3 traffic lights are green. Our our momentum is starting to pop back up. Like if you look at the pattern here, so whenever it was on this line, look what it did. Whenever it was on the second blue line, look what it did. Whenever it was on the second blue line back here, look what it did. Here's another second blue line. It kind of stays stagnant. There's one here, second blue line. It ended up going high. Second blue line here went up. Just looking at the history, guys. Second blue line back in 2022, it reached an all-time high. So that pattern looks good. Once it hits that second blue line, it goes up. Second blue line goes up. You almost can develop an eye for it. It's pretty amazing. So I like seeing that. I definitely like seeing that. So just be patient with TMF. This is how you make money on lowering interest rates and rising inflation. Again, not a recommendation, just for information, education purposes only. If you're going to buy this, I personally like the call options in January 2026, now at $54. I wouldn't go as high as 100. I would probably buy like the 50s and pay a little more, but January's is still pretty high probable trade. So I like that one. And to my next topic, but before I do, wanted a lot of people have been emailing me about like, hey man, you look a lot better. What is it you're doing? And obviously, go to getmeleanusa.com. I've taken these peptides. They're plant based and animal based. They're great. Also, they have like this calm stuff. I give it to my kids as well as myself. Helps you go to bed at night from the stress of the day. There's a focused peptide. Subliminally, you take it. But more importantly, the Fit One and Lean product is amazing. You burn fat, you don't lose muscle. And so I've read a statistic that 1 out of 10 people are on Ozempic, GLP-1s, and they've lost literally up to 30% of their muscle and they look like skeletons. So if that's you, there's one product I would recommend. It's called Fit. It is a peptide. It's literally stronger than creatine. It has 4 times the protein synthesis that creatine has, and it's delicious. It's orange, it's beautiful, and it's made here in America. No crazy products. Definitely get you a packet of Lean and Fit. Go to getmeleanusa.com. Try it out. You can cancel anytime, but subscription based. If you go on a subscription, you save, I believe, 10%. But these products are amazing, and a lot of people, like 400 people, have bought these, and they're raving over them. So check it out. Let me know what you think about it. I'm personally on it. It's helped me a ton with my skin, my mindset, and dude, I was fat as heck. And here's some before and after pictures. Just disgusting. And I'm still working on myself. My goal is to get down to 185. I'm 209 right now. I want to break 200 probably in the next 60 days. I will do that. But my trainer is like, hey, let's get to 185. I'm like, holy cow, that's going to be so expensive because I got to get new clothes. I've already bought my clothes like twice already, and it's expensive, but all good. No longer diabetic, no longer diabetic, no longer have any sleep apnea. Lost 80 pounds. Just walking, eating protein, a lot of protein, your weight in protein, drinking minimal water, not a ton, and just doing 10 to 15,000 steps a day. So that's all I'm doing. Play hockey twice a week. That wasn't enough for me to lose weight. Oh, also, I'm not eating over 2,000 calories a day. That was the big thing. So just get in this season, get discipline. It shows up financially, it shows up medically, it shows up everywhere in your life. And so that's why the mindset is so important. And that's why I love trading because it reminds me of your mindset. And you can't be a victim. If you've done your work, if you've done your due diligence, like we've done in TMF over a year ago, you're going to get paid. It'll produce dividends. If you work on yourself now, it'll produce dividends. It'll be painful right now, but You're working on yourself. So you want to lose weight. You've been on the peptide journey, but you haven't tried the best one out there. And these are natural based peptides that actually work. Imagine being able to lose weight, control what you eat, portion control, hit your protein goals, and it really isn't that hard. You no longer have to worry about expensive monthly shots that you have to take that you don't even know what's doing to your body. This is my before and after, and you can see how effective this is. Try it out for 30 days. You can cancel anytime. There's no gimmicks, made here in America and completely safe. No side effects. All you got to do is click the link below and let's get in shape. All right, so I wanted to have some fun with something here. After we talk about TMF and the interest rates, obviously there's a lot of things going on, and so when we look at the Forex Factory, which is how if you're trading now, for those of you that are actually trading, one of the resources that is very powerful is I don't know if you were like me, but how do you keep up with all this like announcements and when the Fed is talking and all this? Forex Factory is great. Um, it's something I've used for almost a decade now to just get basic information on the calendar. As a trader, we're not supposed to trade the red folders, and you see a bunch of red folders. 8:30 this morning, unemployment claims, flash services on PMI. Obviously, tomorrow, which would be the Jackson Holes and Nipsum. So we can flash over to tomorrow, and Fed Powell is supposed to speak at 10 a.m. So the whole daggone day is going to be pretty interesting on Friday, August 22nd. So I'm recording this on Wednesday night as well as Thursday morning. Right now it's 10:10, 8/21 of 2025. So those dates are very important because tomorrow Jerome Powell will be speaking, and you will see the markets just completely react. And so how you basically get the information is you can go to there's others, but Forex Factory is one I've been using for a long time. Basically tells us what is happening with no BS, no BS. Like just here's what is projected to happen. Here's a graph. This is what investor sentiment is. It's a great resource for anyone that wants to trade. So, on U.S. unemployment insurance weekly claims, August 16th, advanced figure, seasonally adjusted initial claims of 235,000, an increase of 11,000 from previous weeks. Unrevised level of 224,000. So the 4-week moving average was 226,250, an increase of 4,500 from the previous week's unrevised average of 221. The advanced seasonal adjusted. So it's pretty informative where the unemployment insurance weekly claims literally went up. So that is interesting news. And also, now they're saying that growth and hiring accelerate in August. So in August, we've already experienced some growth in hiring. But as you know, with the PPI data, showing weakness and inflation is still not under control. There's a lot of mix up happenings. So I want to look at the charts real quick. And what we're going to discuss is the S&P again. All right. So I wanted to bring up these charts because there's so much volatility going on in the markets with Jerome Powell speaking tomorrow at 2 o'clock, or I'm sorry, 10 a.m. And it will be day 2 at the Jackson Hole Subnipsum Symposium, whatever you want to call it, their Fed meeting. With interest rates, is the big question. Are they going to drop it? Are they going to delay it again? And if so, are they going to do a big drop of 50 basis points, or is it going to be 25 basis points? Going back to Forex Factory, this is how I'm able to keep up with announcements and major announcements internationally as well as domestic. So tomorrow, as we just saw, tomorrow at 10 a.m., Jerome Powell will be speaking on what he's going to be doing. Remember, he's just a speaker, guys. There's a whole boardroom of people that are telling him what to do or agreeing with him or rejecting what he's doing, but he's the main speaker. Kind of like jury duty, there's always one speaker of the jury team, that's him. So even if he gets his head cut off by Trump, he's going to replace him. And this new guy that wants a lower interest rate, there still has to be the whole collective board that agrees to lower interest rates. Well, I think they're all agreeing now that they should be lowering interest rates, and they keep on kicking the can down the road and showing up late to the party, the economy basically, and not lowering interest rates. Now, if we lower interest rates, obviously it's great for you and I, for the businesses. Prices supposedly are supposed to go down, but now we have tariffs that are increasing internationally. And so you will see prices jump up a little bit. But eventually, with the $29 billion that we just made last month, we're hoping to combat taxes, salt and land tax. State and land taxes, also known as SALT. And so we'll see what this tariff income is going to do. I know Trump has a big, big push on tariffs and allowing the tariff money to help bring more money to the economy instead of hurting the Americans and paying taxes. That would be amazing if we don't have to pay taxes and we can just rely on tariffs. So that's Trump's aim. I wish him the best. That would be amazing. You wouldn't have to go through all this, this junk that you have to be a sovereign citizen or the straw man argument or walk away from the tax system. Look, all that is legal. It's just, are you prepared to never have an income statement? How are you going to get a loan when you go to the bank? How are you going to finance property or use debt to build wealth? Like, you won't be able to do that if you don't pay taxes. So I really like what Trump is doing because it allows every American to have income and not get hurt. I really, really like that. So we'll see. We'll keep it up in prayers and hopefully our economy can grow. Look, we've been in how many recessions? 28 recessions. We've been out of all of them. So this whole dollar crash talk, if the dollar crashes, if gold crashes, there's bigger problems than money. Seriously. Like, if the dollar crashes, you shouldn't be listening to this podcast because we won't have internet. There is nothing that you could do, and we would have bigger problems. Like, you would go AR-15 mode, survival food mode, solar panel generator, if that's a thing, with electronics, if we even have electronics. Like, we would become worse than Venezuela. I don't see that happening. I think we're too smart as a country, even though we're stupid with the spending. And obviously, the previous administration was giving it out like it's an Oprah Winfrey show, the money. And the reason why I believe that they were printing out money so much to Israel and Ukraine is because there's about $40 trillion in client retirement accounts, 401ks, IRAs, that you don't even know how much you're going to be paying. So little by little, just like Satan's in it for the long term. Like, he will feed you a thought. He'll give you a little bone here and two, but at the end of the day, he's got access to you and over long term. If you keep on funding your 401k and IRA and hope that it's going to be the best thing since sliced bread, you got $5 million when you retire, whatever that number is. The best thing you can do at that point is just protect what you have because you don't own it. The government does. It is inside of a government written contract. And the reason why I say that is because there's something called ERISA, and Employment Retirement Income Securities Act. Go ahead and look it up. I read the white paper on it just a few weeks ago, and you would not believe the language that is in there. Not one line did they say ownership. It was all participant services. As a participant, this, you have access to this. As a participant, this, you cannot do this. As a participant, you cannot do that. Your company is not responsible for your match. Just crazy stuff like you would not believe. It's very similar to the privacy notice and account agreement disclosures that you sign when you sign on with your FDIC insured bank account, because the banks obviously have access to your money. They own your money, and you have the ability to withdraw it at their convenience. So this is why people uh, like branches, like big names, because they know that, hey, it's next to their grocery store, next to the UPS and that Wendy's and that McDonald's. I know my bank's right there, and I can go anytime. But can you? Can you? How'd that work during COVID? How'd that work in 2008? You see, there's a huge problem with banks, because if they don't have the liquidity, you don't have the liquidity, and you no longer own your money because you signed a contract saying that, hey, if my bank is insolvent, they're going to take the money out, use it as theirs as a bank bail-in. You're going to help the bank because in 2010, the banking laws have changed due to the Dodd-Frank Act, the bankruptcy laws. So there's no longer bank bailouts, there's bank bail-ins. And so we don't want that to happen to you. And this is why you do not put your retirement in a checking account or in savings or in a CD. I don't care if they're paying 5 or 6%, CD rates for 10 months, 12 months, or whatever it is. What is 6% yield times zero? What is the 5.25 yield that you get at the CDs? That's simple interest rate, not compounding, by the way. What is that going to do when you don't have access to your money? That's a real thought. So, looking at Forex Factory, we're seeing all these yellow folders. A lot of them don't really pertain to us, more like Canada, but the red ones do. Unemployment claims. That was today 8:30. And what's cool is that the actual number was 235,000. The forecast was 226. So we see a lot of negative bad news there. So this is going to pretty much going to help the Fed make their decision if they want to lower interest rates. So probably more higher than normal they would. And I'm looking forward to that. Like, I hope the market crashes. It will be great. I mean, we'll make a ton of money. We'll know how to take advantage of it. But this is interesting times, guys. Like, more so that you need to really stay focused on how am I protecting my retirement during these crises that we're about to have. So I just want to look at some trades real quick. The S&P 500, it was popping this earlier this morning. I missed out on a trade. And here's gold right now. My top right is gold, for those of you that are interested in gold. This is gold. We're seeing a pop. It did drop earlier this morning. This is on a 2-minute chart. So you're looking at every 2 minutes, you see a bar. So yeah, it's pretty volatile right now, gold. And a 4-hour, gold's going up after a massive sell-off. So yep, gold is not something you want to invest long-term in. It is somewhat of a safe haven, but it's not. Gold is going up because the American dollar is going down. It's not because of inflation. Just want to make sure we're clear on that. For those of you that are looking at oil, oil right now is at $62 a barrel. Pretty amazing how it just slammed. It was up in this thing was up at 64 yesterday and just went all the way down and came back up. So oil is getting cheaper. It's been kind of stagnant for a while now. Let's go on my day chart. So yeah, it's just been hovering around 56 to 69 lately. And we like those prices, right? No one's really complaining about gas right now. It's just it was so expensive earlier this year. I mean, look at this bad boy. In June, it was at $100 a barrel, and then it's just been coming down, bouncing up and down, bouncing up and down, spiked back up, back to 70, close to 80, Came back down all the way to the low of 57. That was pretty nice. Then it spiked back up, back to 72, all the way down. And so this pattern that we see, now it's coming back down, possibly will come back up. I'm getting green traffic lights. So this is just a normal cycle that we see in oil. Um, so it'll be interesting, man. Tomorrow is going to be very, very interesting. I'll be podcasting tomorrow about the markets and what it's going to do. But I want to just look at some other things real quick here. So let's look at TMF. TMF is the 20-year Treasury. Obviously, with Jerome Powell speaking, if he lowers interest rates, look for this puppy. Right now, it's at 37, 36. Dag on, man. That is really, really cheap. So really cheap. Like you could pick up a few shares of TMF, which is 3 times a 20-year Treasury. Keep in mind, the 20-year Treasury is based more so on inflation and just like the overall economy. And it does help when they lower interest rates because this will pop up. This will really, really pop up nasty. So what's interesting is that tomorrow, if there is a rate drop, you know what? Let's go back to Forex Factory. I want to see what they're saying about tomorrow. So going back to Forex Factory, guys, let's look at the headlines here. So I just clicked on Fed Chair Powell speaking tomorrow at 10 a.m. and look at the related stories. These headlines: Fed meeting minutes will expose dissent. Powell's key speech note. So we'll find out about dissent, if how powerful Scott dissent is going to be, if he has any influence on Fed Chairman Powell. And look at this: Fed Chair Powell in tough spot ahead of Jackson Hole. Some of the headlines: the speech could set up a policy tweak that lasts, and Jackson Hole speech could jolt the markets following breaking out the popcorn for Powell Jackson's Hole speech. And will Jackson Hole confab show more of a Fed's hand? So this is going to be a very powerful speech and market reaction, because they're saying that this is a learning lesson for everyone on some policies moving forward. So this article actually talks about a policy tweak that will last beyond his tenure. And so what's interesting, guys, is that what's interesting is that they're saying that this might be his last go around for his resignation. So I agree with some of these comments here, is that doesn't matter what he does. He possibly is not. I mean, dude, if he does not lower interest rates, there will be so much frustration. There will be so much havoc if he does not lower interest rates. The inflation will be out of control. The dollar will continue to come down. Like, this is not good if he does not lower interest rates. And I think this is what Trump is really trying to expose, is that, dude, you got to lower interest rates. The dollar is hurting, man. Like he's basically saying that, like, figure it out. So here's a US dollar buying up, lower interest rates, the dollar will go up. If he doesn't, then this green will literally just turn down and become red. It will just stop, reach this point, and just come down red. Now, this is on a daily chart, so it's lagging. It's not real time. I mean, it is real time on a daily, but it waits to the end of the day to get the information. So it's going to be interesting on what actually happens. But yeah, there's a US dollar. It is going down, but now it's popping back up. Overall trend has been down. This is why gold has been going up. So I'm sorry, inflation is the reason why gold is going up. So here we are, it's staying flat. Like, people don't even know what to do right now. Everybody's on pins and needles, man. Whenever you see gold like this, that's not a good sign. It's literally in consolidation mode for the past few months. So it's been hovering around $3,400 literally for months back in June, since June. So we'll see. We'll see. I don't know, man. Like I really believe he can lower interest rates. Like I'm 60-40 on this. He can lower interest rates, but I also know that Jerome Powell is a guy that won't get, I mean, he's answering to somebody. We all know who that is, but there is a huge chance that he doesn't. And this market will just go crazy. Like they'll just be frustrated. I think we'll see a sell off if he doesn't lower interest rates. So you got to be prepared either way. Um, I'm really, I really like. I believe he'll lower interest rates. I think he'll get enough pressure where he has to do it because he knows if he doesn't do it, then the markets would sell off, and then we'll be at a full blown recession, like for real. He keeps on saying he wants to see economic data, unemployment numbers, the job rates. Well, that didn't look good, so he's got to lower the interest rates. The PPI was huge because now the PPI, the businesses costs have gone up, so that's just going to the consumer. So prices are going up. So if you got a business, you've experienced it, and there's no other way. I mean, inflation has to go up from there. So in order to control it, they have to lower interest rates. I'm gonna be shocked if they don't. But the popcorn, get it ready because there's going to be a lot of trading opportunities. Either way, just stay tuned with us, and I'll show you how to make money in these interest rates debacles, um, and also show you how to protect your retirement. So one of the major things that I like is obviously following the QQQ index. The QQQ index is very, very powerful because technology is going to do well, regardless. If they lower interest rates, technology will get us out. I'm sorry, if the market is down because they did not lower interest rates, technology will get us out. History tells us. But more importantly, if our economy does well, then the NASDAQ will continue to thrive as well. So we have a strategy there. Now, I'm not recommending that you buy QQQ. What I'm recommending is we have an insurance-based account, a green money account that utilizes the QQQ growth index, which is pretty much predominantly the QQQ with a volatility control. So you have the ability to make 120% of this index moving forward, depending on your state. But you got to give us a call, 813-448-3446. There's no reason to be in the stock market with no safety. Like that is crazy. It's literally driving without a seatbelt. And somebody will just rear end you and you're going flying through the window. I was at a stoplight yesterday, me and my wife, and there was this lady texting, and she literally almost ran into the car that was at stop lights right next to us. And I guess she slammed her brakes and ran into the right side, which is the ongoing traffic. We were making a left, and she was on the outer lane at the left lane, uh, making a left, and she was on her phone. And I swear she was going 30 miles an hour until she realized she had to slam the brakes and drove all the way to the right just to make sure she didn't rear end this person. And she literally did. She missed her by an inch. So that was just imagine she didn't imagine those people, those innocent people in that car didn't have a seatbelt on. You took the risk, get on the road. You know the risk. But there's no need to do that anymore, guys. Like now we have access to equity like returns with no downside. All you got to do is give us a call, 813-448-3446. There's so much opportunity out there on the downside and upside. There's no need to be fully vested in the stock market like your broker, Edward Jones or Morgan Stanley or Fidelity or whoever he's at in your brokerage account. There's no need to have your whole retirement based on the stock market. 100%. So I would be very, very cautious of what is out there, right? So give us a call. Let us give you a second opinion. We're straight up. We'll let you know, hey, you're doing good. We can't help you. Or we can say, you should be doing this. We can give you actually investment advice if you give us a call, 813-448-3446, or just simply book a call with us. Go into our website, cortezwm.com. You can download our free guide at americafirstretirementplan.com. And with that being said, guys, I'm out of here. I got so much stuff to do. I'll see you later on tonight as we talk about, actually, I'll see you tomorrow as we talk about the Fed announcement and the reaction to the market. So hopefully I can get here on time and record Jerome Powell and show you live what the markets are doing. So anyways, God bless you guys. I'm out of here and we will be talking soon. Don't forget to like and subscribe my Rumble channel at Scriptures in Wall Street. Regardless of what happens to my show, I will always be there and you can always catch me there. All right, God bless.